Happy Macro Monday, everyone. Welcome back. This video, I am going to tell you the most powerful tool in investing. Yes, if I could tell investors to just look at one series, this would be the series. Now, before I reveal the series, two things I need you to do for me. I need you to quickly like the video down below, as it will help spread to reach other investors. And number two, if you could, I would greatly appreciate it if you could subscribe to the channel. So, what is the most powerful tool in investing? Well, that would be PMIs. And more specifically, I'm going to be talking about the ISM Manufacturing Index in this video. So, what are PMIs? Well, it's Purchasing Manager Indices, and they are great leading indicators of future economic trends because they measure subtle changes occurring in some of the earliest stages of the economic supply chain. So, here we have this graphic. What normally comes through to company earnings? Well, that is the distribution of products as well as the consumption of products. But there is something that comes right before that, and that is the manufacturing of said products. So, what the ISM Manufacturing Index is, it is a survey of these companies that sit right before the distribution and consumption of those products. So, by gauging the health via asking these companies different questions in this survey, we gauge the health of the industry, and that can tell us a lot. And I mean a lot. I'm going to show you a list later in this video. A lot of things about the current state of the economy, financial markets, bond yields, you name it. Again, I will go in detail as we progress. Now, one caveat I want to make, there is the ISM Services Index as well. And for a variety of reasons, we prefer the ISM Manufacturing Index. It's been around longer. And overall, it just correlates much better with stocks than the services index. So here I show you over time, I just did since 2000, so people could see the details. There's a lot of divergences between the US services ISM and the manufacturing ISM. Now, the reason for that, because you might say the US economy has evolved into more of a service-based economy, specifically across the most recent decades. So why wouldn't the ISM Services Index be better? Now, that might be true, right? I did show this pie chart. It's been a while since I'd shown it, so I felt like I could. Consumption is almost 70% of US GDP. So our economy, yes, is very consumption oriented. However, if you look at the S&P 500, manufacturing is much more important to the makeup of our stock market. So that is some of the reasons why the ISM Manufacturing Index is a little bit better if you're going to be looking at different financial series. And now I promised you a long list of financial series, and I'm going to show you a bunch of charts. Um, and this is a list right here. The ISM Manufacturing Index can be used as a proxy for stocks, equity leadership. So if we're talking about certain sectors or size outperformance, style outperformance, earnings revisions, stock ratings from Wall Street, market breadth, volatility, bond yields, financial risks, even emerging markets and commodities. The ISM is a proxy of all of these, and I'm about to prove it to you. So here we have the ISM New Orders Index. So if you want to rewind a little bit, when I showed you the difference between manufacturing and services on that slide, you'll see the different components of the index. And one of those is the New Orders Index. And that's the one we like to use because it's even earlier than some of the other components within the ISM. And so what you can see here is that stocks, the S&P 500, is a part of the leading economic index, just like the ISM. And look how far this relationship goes back. It goes back to the late 1940s. So we are talking about 70, 80 years of this really, really tight relationship between the ISM Manufacturing Index and the stock market. So it is a proxy of stocks. It is a proxy of the business cycle. It is also a proxy of equity market leadership. So you can use the ISM to try to gauge how the market and specific styles and sectors are going to perform moving forward. So in expanding economy, in this case, I'm showing the chart. So in an expanding economy, or when the ISM New Orders Index is moving higher, you generally see cyclical stocks outperform counter-cyclicals. So the ISM New Orders Index is a proxy of the business cycle. When the business cycle is expanding, cyclical stocks tend to do better. And now again, you can do this same thing with size, style, you name it. You can use the ISM to gauge equity market leadership. Again, this was a long list, so let's continue. It is also a proxy of EPS revisions and stock ratings. Again, look at some of these relationships and how tight they are. So if you want to know more about upward and downward revisions of earnings, you can use the ISM New Orders Index. That's the chart on the left. Chart on the right, you can see relative mentions of upgrade versus downgrade on Bloomberg. So when the ISM New Orders Index is moving higher, or the economy is expanding, you get more upgrades than you do downgrades. And then vice versa when the ISM New Orders Index is moving lower. It's also a proxy of market breadth and volatility. Again, I don't know. I'm going to keep explaining and showing some of these charts just to show how powerful of a tool this is. So on the left, we have the market breadth. On the right, we have the ISM New Orders Index inverted with the VIX. So in this case, when on the chart, when it's moving lower, that means the economy is expanding. When the economy is expanding, we see volatility, or the VIX, generally move lower. It is also a proxy of bond yields, and this one in particular surprises some people, but US bond yields have become particularly tightly correlated with trends in PMIs, especially more recently. This does make sense intuitively, since bond yields are essentially a real-time proxy of the economic cycle, or economic expectations, you might add. So you can see this correlation between interest rates and the ISM New Orders Index. That's not all. It's also a proxy of financial risks. So most gauges of financial risk, like corporate or high yield spreads, which is what I show here, also trend with PMIs. Again, this makes sense, as gauges of risk often measure corporate health. And again, corporate health is largely influenced by the business cycle. Last couple ones I'll show you. We're not going to forget emerging markets and commodities. So the ISM New Orders Index tends to trend alongside commodities. In this case, I did copper prices. And on the right, you have EM risks, or I did emerging market CDS, also tends to trend alongside the ISM New Orders Index. So when I say the ISM is one of the most powerful tools in investing, is that just understanding that one series unlocks so much more. The ISM Manufacturing Index is a proxy of the business cycle, and because of that, you can use that to approximate and estimate and forecast a whole host of different financial market indicators, financial market performance, risk indicators, market breadth, bond yields, you name it. So what I encourage you to do, go look up the next time the ISM Manufacturing Index is being released. Read the survey, understand the survey, read commentary about the survey, because adding an understanding of PMIs to your toolbox will make you a better investor. I hope you enjoyed this video. If you did, I highly encourage you to hit subscribe. Don't forget to like it. I greatly appreciate you being here, and I will see you next week for another Macro Monday video.